So guys, we talked about like bullish and bearish market structures, consolidations. So now I want to just do a quick video regarding market transitions, because obviously, as I already illustrated before when we talked about market structure shifts, we know that the market doesn't trend forever. Obviously, there's going to be some form of reversals, and then the market is going to transition, and we're going to see the market have a backside move. And honestly, if you guys have been following me for a little while, you know I like to trade backside moves, and I'm actually going to break it down all in this video. So I'm going to first off start on the bullish side, right? So let's say we have a bullish market structure. The market is making higher highs and higher lows. Now let's just assume for a second that the market has this type of resistance point, and then we ultimately have a break in structure. Let me draw that again, and I'm going to make this a little bit. Let's say we have a break in structure right here, and let me label that for you guys. Boom, we have our market structure break here because now the market is ultimately broken down. Now, when typically we'll wait for some sort of retest, let's say from high down to whatever low forms here. We might look for a retracement, and boom, the market starts to drop, and then we start to see the market kind of go down, and we start to transition into a bearish cycle. And that's the reality of what the market kind of is composed of. It's kind of composed of bullish cycles, bearish cycles, and this is something that we can utilize for getting in on the backside of a move. Now, clearly we have bullish market structure there, and then let's say price ultimately hits some sort of prior supply level, right? Once the market kind of has a reaction here, and then we start to retest right there, and we get our market structure break. Now we get our lower low. Now price is making lower highs, and the market's kind of went from a bullish market into a bearish market cycle. Now I'm going to get into it when we start to talk about different trade setups, but this right here is actually one model that I use in my trading, where I kind of wait for a backside of moves, especially if, let's say, we have an area of resistance here. The market is bullish, right? But let's say the market is bullish near term. Let's say all this structure in here, right? This push up, and I'm going to just delete all this. Let's just say hypothetically that the market was kind of pushing up like this. It was bullish, but let's say this is bullish on, let's just give it a time frame. Let's just say this is an M15, but on the 1 hour, what if on the 1 hour we were actually have a big drop like this? So on the 1 hour we might be bearish. Now on the 15-minute we might, or the 30-minute, whatever time frame this could be, we might be seeing short-term bullish price action, right? So we have our 15-minute structure being bullish, but the 1 hour time frame is actually bearish. This is when I would look for the backside of a move. So again, just to make this thing a little bit cleaner, right? We do have, let's say, bearish structure, but then the intermediate term structure is bullish. And let's say we have like a prior area of consolidation somewhere here. Now we can utilize this as an area where we want to anticipate a lower high on the 1 hour time frame, one time frame up, but the M15 is actually in a bullish cycle. So once we get that market structure break, retest, now we can look for backside moves and target this next lower low on the 1 hour. Now, again, I just want to talk about market transitions in this video. We're going to talk so much more in depth of these types of price fractals when we get into our top-down analysis approach, and I'm going to be showing you guys a lot more in depth, but I just want to do a quick video on the market transitions so you guys know that sometimes when the market is, let's say, in a bullish phase, we can look for a backside move when the circumstances are correct. Now, just for completeness sake, I'm going to do the opposite as well. So let's say the market is in a bearish cycle, and let's say we have some sort of support level in here, and then when we draw that out, we see that the market ultimately comes down, and then we have a very strong impulsive move, and we get our market structure break. When we have our market structure break here, right, and even if it broke that high, that's cool too. We know that if the market comes here, and then we might see a potential higher low, and now we can start to look for the market to kind of reverse, and we start to transition into a bullish cycle. Now again, don't worry about the nitty-gritty about this, because this is going to make a lot more sense once we get into our top-down analysis section. That section, I'm going to make it a very long video, and we're going to go through so many different examples, so that way you guys can see all these concepts of market transitions, bullish market structure, bearish market structure, consolidations, all the concepts that we're going to be talking about. You're going to see how we're all going to put it together right at the end. But just know that the market doesn't trend forever, obviously. The market does have phases of transition. We do break structure sometimes, then we start to reverse and go to the opposite end of the market cycle. So we're going to talk about it more, and then the next video we're going to be starting to talk about supply and demand.
Ever wondered why some people seem to effortlessly grow their wealth through Forex trading while others struggle to break even? It all boils down to strategy, the right kind of strategy. Let's dive deeper into the world of Forex trading strategies, shall we? First off, the Forex market, also known as the foreign exchange market, is a worldwide decentralized financial market for trading currencies. It's the largest and most liquid financial market in the world, with an average daily turnover in the trillions. But what are these strategies that successful Forex traders employ? One of the most popular is trend trading. This strategy involves identifying the market's direction, either up or down, and placing trades in that same direction. Sounds simple, right? But effective trend trading requires keen observation, patience, and discipline. Another strategy is the breakout strategy. Here, traders set a predetermined point that once breached triggers either a buy or sell order. This strategy banks on the fact that once a level is breached, the momentum is likely to continue in the same direction. Swing trading is another strategy where traders aim to capture short to medium-term gains in a stock or financial instrument over a period of a few days to several weeks. But remember, no single strategy guarantees success. It's all about finding what works best for you, continuously learning and adapting. Now, here's a thought. What if you could put these strategies to the test and stand a chance to win fantastic prizes? That's right. It's time to flex your trading muscles in the Billionaire Makers Hub Forex Trading Challenge. It's an opportunity to learn, grow, and maybe even discover a strategy that could change your financial trajectory. But it's not just about the prizes. It's about equipping yourself with the tools and knowledge to navigate the Forex market. It's a chance to be part of a community of like-minded individuals all striving towards the same goal, financial freedom. So why wait? The Billionaire Makers Hub Forex Trading Challenge is your ticket to not just learning about Forex trading strategies, but mastering them. Remember, the Forex market waits for no one. The question is, are you ready to take the leap?